Welcome to the Art of Money podcast with Art McPherson.
And thanks for checking out the Art of Money podcast. My name is Mark Owens alongside Art McPherson and Luke McCarty. All the information for the McPherson Financial Group, you can find it at theartofmoneyradio.com. Well, there's a new face on the page. I want to welcome out Mark Bernard to the Art of Money, newest member of the McPherson Financial Group. How are we doing this weekend?
I'm doing well, thank you. How are you?
Man, we are great. So you are officially the CPA of the McPherson Financial Group.
That's right. I'm working on the tax issues and looking at various financial planning opportunities that might be available from a tax point of view.
Nice. And how long have you been in the community?
I've been here for about 8 years, moved down from Chicago. I have 3 little ones that I brought down and my wife down here with us. We live in Indy Atlantic and love it over there by the beach.
Nice. And how long have you been a CPA?
Since 1998, so 25 years.
More importantly, how's it been working with Art McPherson? Are you just exhausted? I know it hasn't been that long. Man, it's gone.
Thanks, Owens.
It's gone quickly. The last month has been quick, but it's been great. You know, I get to sit in on some of the annual review meetings and watch the folks that are coming in with their goals and looking to try to figure out how to do their final years of their life.
Matter of fact, we were working on a case this week, and you were telling me that my client wasn't pulling enough income, and they were not able to fully deduct their standard deduction.
That's right. So, you know, you look at some of these tax returns, and folks are always very conscious on not paying taxes, but you get this $24,500 standard deduction every year, and everything up to that point in taxable income is not going to be paid by taxes by you.
This is also the end of the year, Mark, and one of the things that we are doing with people when they're in the office is we're reviewing, are they taking advantage of their 401k deductions? You know, there is a legal deduction someone can take, but then there's an extra deduction if they're of the age of 50. Can you explain that a little bit and why that's important?
Yes. So on your 401k, you get to take up to $19,500 towards your 401k contributions. If you're over 50, you're into the period of the catch-up clause, which allows for 401ks an extra $6,500 per year in additional contributions. In addition, the Roth IRA contributions are $6,000 a year, and the catch-up provision for that for folks over 50 is $1,000 extra dollars.
And that you can do outside of your 401k.
That's correct. So you take your taxable funds, you put them into you contribute them into a Roth IRA, and that gets to grow and be distributed tax-free in the future.
And one of the things we've been working with a lot of people as the year is coming to a close is Roth Conversions. Can you explain why that's an important issue?
This is one of my favorite planning ideas that you've been bringing to folks in these meetings, where they are looking at the sweet period that I've been saying that we're in right now with taxes. The Donald Trump taxes have us at historically low rates, and we expect in the future that those rates will go up increasingly more. And so taking advantage in this sweet period of being able to create that taxable impact today to put into a Roth IRA, which allows that money then to grow tax-free and again be distributed tax-free in the future when we're in higher tax rates.
So, Mark, how long will that sweet period last?
It was a 5-year period that it was grandfathered in. I believe 2024 is the year that it sunsets, and then it goes back to the old rates that were in place before Donald Trump made those tax cuts.
Talking to Mark Bernard, newest member of the team at the McPherson Financial Group. He is a CPA, and you can meet the team at artofmoneyradio.com. And as you're talking about the end-of-year checklist, Mark, for us, what is the most important thing we need to check off our list, our financial checklist as a CPA? What's the most important thing we need to do?
Well, as you're getting near the end of the year, I think you should be trying to figure out exactly what your taxable income, or at least by estimate, what your taxable income will look like, so that when we're doing that, we can look at things like, should you be taking advantage of a Roth IRA conversion, or are you getting enough income so that you can maximize your standard deduction? All of that starts with estimating what the taxable income line will look like on your 1040.
And Mark, you know, you often hear the difference between tax prep and tax planning. Explain that to us again, because sometimes we only think about tax season like in April, but this is something we need to deal with all year round.
Correct. Yeah. So, you know, for a lot of people, their income in the future can be estimated. They know what the cash flow is going to look like. So knowing that gives you one step to being able to do tax planning, in which you can then look at the scenario that you're in and figure out what's the best way to do this tax efficiently, whether it's buying life insurance, whether it's using trusts or using your Roth IRA versus 401k, where those distributions come out of, because sometimes they're taxable, sometimes they're not. That's all part of the tax planning. Tax preparation to me is getting all of your documents together for the tax return. So, I know in January you'll get your 1099s and W-2s, but maybe there's some other things that have gone on throughout the year, different transactions that have occurred. Getting that material to us sooner the better, so that we can be prepared when it's time to put a pen to paper.
And what's one of the biggest mistakes that you see that clients make when it comes to tax planning?
Well, not knowing the code and not thinking about the various boxes that your income can sit in, whether it's in a trust where it's not in your name anymore, where maybe you're getting life insurance proceeds so that it's tax-free at times, or if you're going to be taking out a taxable income. People don't allow themselves the diversity of keeping their incomes in various baskets, so that when it comes time to distributions, you can plan accordingly and try to do it in the most tax efficient manner.
Basically what he's saying is what we talked about in the book. You want to have a taxable bucket, a tax deferred bucket, and tax-free bucket.
Right.
So having all those buckets are a big part of the plan.
Well, Mark Bernard, welcome to the McPherson Financial Group, the newest member of the team, CPA, now part of the McPherson Financial Group. Man, thanks for hanging out with us this weekend on The Art of Money.
Thank you for having me. I'm glad to be part of the team.
Thanks for listening. Want more from Art McPherson of McPherson Financial Group? Find us online at artofmoneyradio.com. We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Securities offered through World Equity Group, Inc., member FINRA and SIPC, a registered investment advisor. Investment advisory services offered through ProStatus Group, LLC. McPherson Financial Group and ProStatus Group, LLC are separate entities and are not owned or controlled by World Equity Group, Inc. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Investment financial professionals are not licensed in all 50 states. Art McPherson is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Arthur McPherson. Florida Insurance License number A174. 725.
Today's show has been a work of art.